What's going on, folks? We're gonna be reviewing and recapping about our last three trades we've taken, and to be honest, been smashing NQ. Like, we haven't lost a single NQ trade this week. Like, just look at since weekly open how we're just smashing a long entry after another, and you cannot find one under 2-3R. So I'm just gonna be recapping about the last three trades we've taken. So we're not gonna be talking about more because I just want to make it as a quick explanation. You got this one on yesterday's New York session, and this one on yesterday's PM session, and this on today's New York Open, and which is after the New York AM macro lunch. So we're gonna stop talking and jump right into the top-down analysis I used. So looking at the 4-hour profiling, as you can see, the Thursday's 9 a.m. 4-hour low. So this is what I look like usually on the 9 a.m. 4-hour candles. So it's either gonna be a reversal candle, which if we're bearish, it reverses and goes to the upside, or as an expansion candle. For example, this closed bearish, and the 9 a.m. gives us the expansion lower. So I only look for these two type of scenarios on the 9 a.m. candle, nothing more. Even though we had the weekly buy side, this was our draw on liquidity, all right? While people were thinking that the draw on liquidity was already hit on Monday, I was thinking about these two figures right here. I was thinking about this weekly buy side. I don't have short-term targets. This is not my target. I mean, this was my short-term target. This wasn't my only draw. This was one of my draws. Look how many draws I had throughout the whole week. This is our new week opening gap. So this is the closure of previous week. And right here is the open of this week. So this is our new week opening gap. Some people act with new week opening gaps. So right here, I'm gonna even mark it with boxes. Some people act with this like an FVG. Fuck no, that's not how you act with new week opening gaps. I don't know who rebranded this, who changed the rules for this. But no, I just look at it as algo zones that has not been filled. So I just use it as the same way as a breakaway gap. I don't use it as a fair value gap. I use it as a zone that prices out of and is looking to fill in as soon as the institutions are willing to. And as you can see, immediately after the weekly open, it got filled. I'm not acting with it as a fair value gap, tapping into it and going lower. Nope, that's not what we are doing. So, we got this intermediate term high, which I marked it here. This was our 4-hour long-term high, daily intermediate term high, weekly buy-side resting and price run. This wasn't my last target. And you got these two figures resting up here. So the first one got smacked and we took the buys for it. And going back to this 9 a.m. candle, as you can see, it wicked down, closure above the previous down close candle's wick. So this is really important. I don't want to see no bodies under this wick, under the 5 a.m. wick. So the formation of the 4-hour profiling on indices, on futures, is 1 a.m., 5 a.m., 9 a.m., and 1 p.m. But on CFDs and metals, it's going to be 2 a.m., 6 a.m., 10 a.m., and 2 p.m. So it's like 1 hour after the indices 4-hour closures. It's like a 1 hour delay between them. This wick, as we said, closed under this down close candle's wick. So this was our manipulation on the 1 hour. As you can see, what we are into as well. So we were into this 4-hour internal range. So in what type of situation were we? Internal range, right here, internal, back up to external range. This is what we were looking for. And we always look for long-term movements. We don't look for short-term. We don't look for targeting 2R on a single replay mode trade and calling it a week. No, that's not what we do. Going down to the 1 hour chart, here was our manipulation. As you can see, here was our Wednesday open at 6 p.m. here. So our daily high, I wasn't considering this as a high of the day because it wasn't just hit for me. No figures were hit, and this was, as I said, my first target as a figure. And our price came down, manipulated under the daily open, and at New York, this manipulation right here was after New York open. So I was looking for a New York reversal right here. As I said, the 9 a.m. 4-hour candle is either an expansion or a reversal. This was a quite visible reversal situation scenario. So I was eyeing for those equal highs up here. We had a bunch of stops resting for us up here, and those were my short-term draw on the 15-minute. And as you can see, on New York open right here, 9:30, price wicked up, failed to displace or run those highs up there, came down, and I was eyeing for those lows, those two lows down here. Taking you to the 5-minute, the place where I actually executed, I was looking for these two stops on New York open. So here's our New York open candle, 9:30. And you may be wondering, what are those orange boxes here? What are they? So I'm gonna be honest, and I'm gonna tell it right now in front of you guys, and I'm not gonna change my words. This is gonna be really helpful. I'm not running anywhere. I'm not running away. My concepts, my teachings, my videos, my executions are all live on Discord, X, Telegram, and YouTube. That's it. So, what are these gaps? These two gaps were the only point of interest I was marking or noting before New York open. So, I'm gonna give you a quick lesson that on pre-New York, what do I mean by pre-New York? I mean by 7 a.m. to 9:30 a.m. This right here is your pre-New York period of time. This is your pre-session. So right here in this period of time, you're gonna be finding out what's gonna happen on New York. So back here was your 7 a.m. over here, 7 a.m. to 9:30. So right here, marking out for you on 7 to 9:30. So in this period of time, I'm gonna find out what is price gonna do. And as you see, exactly after the New York open candle, all these stops in this accumulation zone, in this consolidation zone, got ran. Here, the 9:25 candle. So, dropping down even to the 1 minute, the last time frame I was looking for an entry. So we marked out our pre-New York zone here, and what are we looking at? The same shit we were talking about, relevant equal highs, got ran by at 9:29, 1 minute candle. New York opens, wicks to the upside. We're gonna delete this red one for now. So, wick to the upside, came down. We had a lot of resting sell stops down here. 1, 2, 3, 4. Price ran all of this after New York open. I wasn't looking for shorting. Congratulations for people who took the shorts from here to here to here. Yeah, congrats. But I wasn't looking for that. When your day ended here, my day started here. After this upside move, a structure shift, and this retracement to the downside, expansion higher, my day started here. When your day ended here. So you're gonna tell me your entry was after this first presented fair value gap after New York open right here, then you're gonna be like that, targeting down. 3R isn't just gonna make my day. So in this period of time from 7 a.m. to 9:30, the pre-New York session, what am I gonna be looking for? I'm gonna be looking for fair value gaps, inefficiencies created between every 15-minute period of time. Every 15 minutes. We start at 7, 7:15, 7:30, 7:45, 8:15, 8:30, 8:45, 9:15, and 9:30. So it's just gonna be like, for example, you're at 1, and then you go on 1, and then you go 1:15, and then you go 1:30, and then you go 1:45, and then it just goes on, you know? So this is what you're gonna be looking for in pre-New York. The first one is the run of stops, either buy side or sell side. The second one is the gaps presented every 15 minutes of time. Okay? So we had buy stops run. Here, the two levels that I marked out and I noted on X and Discord. So both of these, I didn't hide shit. And you can go to my X account, you can go to my Discord. I have not deleted anything, I have not edited anything. I'm not showing shit of my executions of replay mode. I'm not hopping into replay mode and showing you my strategy. No, that's bullshit. As soon as markets opened, as soon as you got live market right here running, I don't need replay mode. I'm not a bastard just waiting for market to close to hop on a live stream and show you my strategy wherever I want through replay mode. No, we got all of these live. I'm not a mentor that only shows you my trades throughout the day after I got TP'd. And if I get a loss, I come up to you guys, oh no guys, I have not executed anything today. And if I win, I come up, my strategy is the only way of truth. Now, I'm not this type of a mentor. I know for my students, from the beginning of the day till the end of the day, every single point of interest they have to have on their charts noted. Go throughout my accounts and you see it day after day, repeated. So, the 7:30 gap was noted on our socials and the 8:30 gap. And notice how after New York open, price displaces under both, tapping into first presented New York gap. So this is usually a high probable gap, the first presented New York gap. Taps into it and runs all these stops we had here. It goes even lower. So after here, this was our smart money reversal. I don't want price to run these stops anymore. Went to the upside, structure shift right here, off this high, closure above it. This is our market structure shift. I'm gonna even mark it out. So after here, I don't want to see any selling volume or selling momentum anymore. So price came up, I was just waiting for displacement above the first one. All right. So as you can see, price came up, displaced above this, and struggled to close above this, but my eye was on the first one. Look at the first one. We need high R. We need like the perfect executions. We don't want to enter off a high level. We buy in discount, sell in premium. We don't gotta be late for no reason. Well, we're not scared. So here, notice how all the bodies are respecting this gap after displacing higher. Wicks do the damage, bodies tell the stories. Just don't give a single shit about the wicks. We don't care about them. So look how all the wicks are outside the downside part of this inversion fair value gap. Displacement above it, my entry right over here after the first gap presented here. This was my entry, and you had a mitigation. This was our mitigation block, the high of this candle. So you have your low, high, higher low, and higher high. So this is your mitigation block, your bullish mitigation block. So this was my entry. What was I targeting? The projections I marked out. So as you can see, all of these buy stops. Here was my TP1, my first target, and then price ran after I placed my stop at break even here. As soon as we had the equal highs ran by, and I just let it play out. Like I can even show you my execution here, trading execution marks, and here was where I closed. All right, closing my day here with a 4-hour trade. This was my entry, as you can see, buying here, ending it up here. So this was our first trade. Sorry, because it took us too long explaining, and noted every single high level on our channels, other socials. And as you can see, this was the low I told you we had a smart money reversal of, and I don't want to see these stops running below it. It never happened. Like price had a big retracement here, but it didn't run those stops, neither did it here. So as you can see, price just continued accumulating and expanding to the upside after this smart money reversal right here. So this is what I mean by our high probable entries and targets. Next trade, hopping on here at New York PM. So our New York PM entry, I'm just gonna show you in a short way. Same thing that happened on the AM session happened on the PM session. So all of the levels were noted, all of the levels were sent in the channel, and as you can see here, I had two levels to note. First one was the 134 gap, and the second one was the 3 p.m. gap right here. This was it. So I was like, keep an eye on those two levels. So price tapped in once, twice, 3 times, 4 times, 5 times, not being able to displace under it. And where I took the confirmation right here was the type of place I entered. I did not give the signal on Discord, but it was on Telegram. So here was where we entered, aligning with the breaker block right here. A fair value gap, a 3 p.m. high probable gap, aligning with a breaker block. What better do you need for an entry? Price broke structure, displacement above previous structure, had your breaker block, a low, high, or lower low, higher high. The high of this phase of price is your breaker block right here. So this was my entry. Where was I targeting? The figure I was waiting for weeks, for days, since this week's opening. This is what we do. Price did go back up. On the 5-minute chart, you can see the wicks going out of this gap, but the body's respecting, came back, gave a retracement, retraced into this, and kept going higher from then. So showing you on the 5-minute, this is what the entry looked like right here. It took a bit of time, but I just got up today before New York and I saw this trade getting smacked after 8:30. So here was exactly on the 8:30 open, we got TP on it. And all again posted on Discord, Telegram, and X. Hopping finally to the last trade we've taken on today's New York Open, taking you to the 1 minute chart. Our bias was completely bullish. I wasn't looking for a reversal unless we take this figure. So this was what I was looking for, aligning with my bias. Like I was not looking for such a move to the upside right here, having some type of, I don't know, rebranded SMTs and stuff, and looking for taking the sell side down there. This is not what I was looking for. I was looking for immediate expansion after target. Like our target gets smacked, expansion higher, short-term retracement, and from then going higher for our next figure. The same thing that happened here, the same thing that happened here, same thing that happened here. As you can see, short-term retracement into 15-minute internal range, and from then price just kept expanding. Same thing happened here. After expansion, short-term retracement into a 8:30 point of interest on the 1 minute, and expansion from then. Going to the 1 minute. So we had our opening range gap low down here, which I did not want to see price going for. This is why I told you my bias was completely bullish. I did not want to see this RTH, the New York opening range gap low get taken. So 9:30 open, I'm gonna get rid of those projections. 9:30 open right here. You see this one right here. 9:30 open. We mark out the opening range gap high, which is the 9:30 open, and the opening range gap low is the previous day's New York PM close. This is gonna be it right there. It's gonna be the previous day's 4:59 closure candle. This is your opening range gap low. Your high is gonna be the 9:30 recent open right here. So we mark out the projections. How do I mark them out? These are the levels right here. So the levels, you may be asking me, why am I only marking the higher or the lower quadrants? Like the 125, 0.25, 0.5, 0.375, and finally negative 0.5. Why am I marking one side of the quadrant? Like showing you right here. From this high, let's say, to this low. Why am I only marking one side of the projections and not the other side? Here. Why is here empty? Because let's say we're bullish like we were today. Mark out from the high, from the low to the high here. And let's get rid of this. Okay. Because we open here, right? Here's our open point, mark out from low to high. We drop down, retracement accumulating through this. Let's say we have repeatable retracements in the zone. We break the 0.5 level. I'm not looking for bullish targets anymore. I'm not looking for such a thing. We break, we displace under the 0.5. We are going lower to the RTH low, the opening range gap low. So all we need to keep an eye on for such reversals is the 0.5 level. The 0.5 level decides whether is it gonna respect the upper quadrant and expand higher, or is it gonna just accumulate in this zone, displace under the 0.5 level, and go to the other side of the opening range gap? So how did I mark these up? My bias was bullish, as I said. Marked these projections from the low back up to the opening range gap high, the 930 open. And as you can see, aligning with the half of the quadrant, the 0.25 is the 50% of the half of the quadrant. So it's the midpoint of the higher quadrant. Aligning with what? What did we talk about? The 15-minute period of time between every gap. 8:30. And what is 8:30 in? The 7 a.m. to 9:30 pre-session period of time. This happened in the pre-session. Okay? This is why we should be using the right gaps. Okay? We're not using all of this. I'm not using an indicator marking me all of these. No. I don't want all of this to be marked on my chart. Just knowing, just like a fair value gap maxing, that's not what I look for. So, getting clear of the macro, it got me blind. So what happened is price retraced into it. This one that we talked about is also 845. This one counts, right? But you want to look where price is now. You gotta find yourself, where are you now, so you can find out where are you going, right? I'm not a predictor of the market. I'm a follower of the algo prices. I'm the follower of the algo. I'm not a market predictor. Predicting Bitcoin from $1 to $1 million. No, that's not real. What I do, what I even think about. So where were we here? Under 930 open, right? In the 830 presented gap, respecting the half upper side of the quadrant, the 0.25 level. So we're in all these of interesting points. What we do here, SMT, right here between these two lows, between NQ and YM, ES, and we go higher, expand higher. This is our first presented New York gap, which I didn't want to see respecting and going lower, because I saw already respecting the half of the upper quadrant, respecting the 830 gap twice, like first time, second time, and expanding higher up to the projections target, which is the negative 0.5 is our projection target for the opening range gap projections, targeting up here, aligning with the buy stops up here. Like even if you see expanding the target back up to these stops, it ran by all of them. A Q3R trade. Like even though I had my stop placement higher on the 0.5, I should have had it on the stops down here. But anyways, we had a 3R trade, a beautiful one, how price displaced to the upper side of the first presented New York gap right here. First presented gap, displacement to the upper side right here, retracement back in. This is acting not as a fair value gap. Now it inverts, it's an inversion fair value gap. Acting as an inversion fair value gap, tapped in it once. Like look at this one candle, tapped into it, showing rejection to the upper side and just expanding higher from done. This was a beautiful trade right here, caught in 1 hour. It just took me 1 hour, not more. 1 hour. What happened in a smaller way of explanation? What happened? 9:30 opens, search for the pre-session point of interest, 7 a.m. to 9:30. We had this 8:30 gap aligned by the every 15-minute model, gap alignation. New York opens. Our bias is bullish, marked out the projections from the low to the high, looking for the upper quadrant, aligning with the 830 gap we marked. Dropped under the 930 open into the point of interest, came back up, failed to run by these stops up here, these stops created on 930 open. Dropped lower. We had a lot of liquidity resting up here. When price came back down, hit this. You could have just layered one more trade. This would have made it much more beautiful. Even knowing we have such a gap ready to get inversed, broke, displaced to the upside, retraced in, going to the upside again. So marked out the projections again, came back down, tapped into the gap, came back up, displaced the first presented New York gap, came back lower, retracement, tap in, rejection showed, an expansion back up to the upside. Short-term target, that point is a negative 0.5 level. Long-term target, going back up to my next figure. And this figure is gonna get smacked. I'm not saying this figure is gonna get hit right now. I was saying it from the day the market opened down here. I had those two levels noted. Not only this, but these four levels were noted all in our channel. All in our channel. Nothing is hidden, nothing is changed, nothing is edited. I'm not showing no shit in replay mode. Every single thing is taken live. Every single note is published live before market opening, before New York opening, before even the expansion has been showed. So this is going to be the quick recap video about our 3 trades executed in today and yesterday's price action. Hope this video is useful. We are going to have our teaching lessons up. Don't worry about that. Every single thing you see on my chart, every single execution took by my concepts I use are going to be taught really soon. We're going to start up on YouTube. And we're going to be posting our live backtest and teaching sessions. We're going to start posting our trade recaps on YouTube. We are going to post teachings as well. So this is going to be it for today. Hope you all have a great weekend.